Yo, what's up, everybody? Welcome back to another episode of Stock Review. So, today, right, we will be continue to look at one of the stocks from Mag 7, which is going to be Microsoft. Previously, during the earnings report session of the Microsoft, the stock actually pumps with a huge gap. So this gap is worth almost $29. It was a crazy recovery from Microsoft, and I think it will continue to go up pretty well. Performance is quite good. However, one thing that we should be looking out is this resistance level, or actually yesterday, our president of US, Trump, have signed deals with the UK on the trades. The markets went up, all of them. Okay, and even for Bitcoin, it actually surged back up to 100k, which that is crazy. Okay, and gold went down. Okay, a lot of people saying like, oh, people that went bulls on the gold is now suffering. Yeah, actually, yeah, it went down a lot yesterday. So for Microsoft is now currently having the PE ratio of 33, which I consider it as reasonable. So it's not that cheap also. However, it's also a consider to buy if the price action allows you to. But right now, the price is actually going back to the all-time highs, which is not going to be that decent. Okay, the risk to reward is not gonna be right. However, if you're like a long-term buyer holder like me, yes, I will buy right now. However, I really want to punch myself in the face first because I didn't actually buy the Microsoft. Okay, I have a plan whereby I wanted to buy at this level of support. Okay, I want to buy at this level of support, but then right at that time it's like very intense, and I sort of like I don't know what to do, so I missed out the trade over here. And well, you can say like, oh, since you're a long-term holder, why don't you just buy it right now and then hold for like 10 years? Yes, I would like to, but right now my free cash flow is actually all allocated to specific stocks. It's not like their movement is exactly the same like Microsoft, but at least I'm actually quite satisfied with holding that company lah. The next things, which is going to be the financial metrics of Microsoft, we can see that actually the revenue is increasing tremendously, alongside with the net income, of course, indicating this company has continuously generating high revenue and income over the past 10 years, which actually says that it's actually immune to recession, especially in the 2020. See, it will be able to continue to generate more revenue despite having like being in a recession, so on and so forth. So same as net income 2022 is recession proof. So 2008, we don't have the 2008, but then for 2022, the small bear market, yeah, it also being able to generate income quite well. As for the free cash flow, is increasing free cash flow. That is a very decent company. With recent free cash flow exceeding the debt, that is almost perfect already. And then we have slightly increasing ROE, with the latest one being at the 32 level, and increasing ROIC with the latest one being at the 22 levels, which is decent. Overall, Microsoft is actually a company which I believe will stay in the market as well. This company has really solid positions, and I do have to say like Microsoft previously, its correction is very huge. If there is chance whereby Microsoft dips a lot, it is a confirmed buy for me, because look at the company metrics as I just showed. Great revenue, great income, great free cash flow, everything positive in terms of financial. That is a good sign for a company to be able to hold its position as well as to stay in the market for a long period of time. moving on, we will continue to seek for information from our friend ChatGPT in terms of knowing how Microsoft is doing right now. In terms of revenue, the Microsoft reported total revenue of 245 billions, marking a 15.7% increase from the previous year. So that is a decent growth for the company, and the source mainly come from the intelligent cloud, which is the Azure and server products, as well as the Microsoft Offices like the 360, LinkedIn, the Microsoft Teams that we'll be using, Outlook, Word, Excel, all those kind of services, as well as more personal computing. So this include like Xbox, Surface devices, and compressed window. These two I'm not sure what they are, but yeah, Xbox I do think that everyone knows it, and this is one of the most significant and popular items that most people want to buy, especially for kids in the US. So the strength of this company, right, is because of its great software and cloud services. So definitely, yeah, we can see a lot of software such as the Word, Excel, even Outlooks and Microsoft Teams, which allows more cloud-based assessment of work, such as to meet or to do file tax reports, all that stuff. Plus, it is a company that works well with OpenAI. So yeah, it does have collaboration with companies like OpenAI to enhance its AI capabilities, which is the Azure. And it's not like they are being hit hard like Google by other companies such as, oh, we use AI instead of you, because they also implement AI in themselves alongside with their cloud-based services as well as softwares, which enhance the capability of bringing better service to their customers. As mentioned, they have multiple sources of revenue, so this comes with diversified revenue streams, which comes from various segments, selling software, cloud-based services, personal computing such as the Xbox as well. In terms of weakness, it is actually more based on the PC market. Yeah, so it's not like they are fully focused on the AI sector. However, most of their products is actually PC based. So that's one thing, and I'm not saying like, hey, it's bad for them, but at least like for software, cloud-based services, all that are actually very, very high demand, because everyone right now is using their phone, their laptops, their tablets in order to do works through this software for easier access to the tools, which helps them to combine and complete reports. I know, right? AI can help to do this, but without this software, AI couldn't do it as well, because it's impossible to ask AI to do a report by themselves, which is actually computationally expensive. And with the help of this software, things can be made easier. And there are also some of the other weaknesses such as security concerns, as well as integration challenges such as potential difficulties in integrating acquisition effectively. So in terms of intrinsic value, we have Alpha Spreads having the intrinsic value at 304 per share, as well as Value Investing being an intrinsic value at 282. Guru Focus, intrinsic value at 192. So overall, you can see that the intrinsic value on the Microsoft is actually really, really low. So right now, the stocks is trading at freaking level of 430 plus ringgits. Not ringgit, sorry, dollar, US dollar. So average, right, they place their average, the intrinsic value is actually around this level. These two levels. And we've shown that, hey, every stocks have their own intrinsic value. Right now, Microsoft is trading above its intrinsic value, and I wouldn't buy because it's still so expensive. Why? Why is it so expensive? It just keep going up and up. Well, of course, this intrinsic value goes up every time alongside with its performance. However, if the real intrinsic value is really that low, I don't know, but Microsoft sitting almost at the all-time high right now. doesn't attract me to buy it because it really is expensive and I want to buy it cheap. I'm not saying like the dips before is not making it cheap. It's not like cheap enough. That's all. So conclusion: Microsoft has strong financials, diversified revenue streams, and strategic investment in cloud and AI technologies. However, potential investors should consider the current stock valuation and intrinsic value estimate. Blah 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 blah. So yeah, overall, this company is a great company with strong financials, diversified revenue streams, and the only problem is that it's too expensive. That's the thing. The intrinsic value estimation. There is no true intrinsic value valuation. You can say that, hey, this stock is actually cheap, although it's sitting at almost at the all-time high. I can agree to that, but for me, I'm willing to buy it at a cheaper price. So that's all for the Microsoft closed case. Okay, it's not I'm not buying it forever, but if it comes back down to a very cheap place, hey, welcome to my portfolio. So we also conclude that Microsoft, just now I mentioned strong financials, diversified revenue streams, and it's not something like it's being threatened by the market. It has strong economic moat, not like Google, which recently just faced the threats of Google search and search services, which could potentially reduce customer because of AI. Okay, they do have AI, they Gemini AI. However, the services of Google search by other companies may reduce due to AI. So it doesn't mean that it will completely collapse, but yeah, somewhat it will affect the revenue source, of course. But why don't they just actually use the Gemini AI from Google, right? Or they just want to tackle Google and then say like, oh, I don't want to use your Google search. That's all. Crazy. Yeah, that's all for the review of Microsoft company with strong financials, great diversified revenue streams, have AI, have cloud-based services, software, which is the software that you use daily, such as the Word, TXT, the Excel file, PowerPoints. Or we also have Microsoft Teams, which is especially used by almost all the educational institutions for meeting purposes as well as to assign projects as well. That is all for Microsoft. Pretty decent company. If you want to buy, you can buy now and hold long term because it's sitting at an all-time high level. But for me, I would suggest that, hey, why not we wait for further pullbacks, right? We wait for further pullbacks into cheaper area, maybe another 50% discount. Because for your information, this right is only half the discount that I want. So it's not decent as well. I mean, I could buy it at this level, but yeah, stupid me. Okay, stupid me. I make a mistake. But it doesn't mean that there is no chance. There's never a chance for me to buy it anymore. So that is the thing, and that's all for today's review. And if you have any stocks that you want me to review, feel free to comment down below. I'll go through it, and then we will see on the next video about your stocks maybe. But for now, we will go through the Max 7, and the next one we will be going through the 500 companies, which is the S&P 500, and reviewing every stocks inside. Okay, there will be some replicated stocks such as the Microsoft, Amazon, Tesla, but then we will skip those, and then I'll make a list, and then we'll skip those if that stock is actually we have done that stock before. If you like the video, please do support, and by clicking the like button, the subscribe button, share my video, and I'll see you on the next one.